Gold price shrugs off real rate and Fed kryptonite as jobless claims rise. Gold prices rallied back above $2,000 per ounce Thursday as worse-than-expected US jobless data saw the dollar slip with both global stock markets and longer-term interest rates. Benchmark yields on 10-year US Treasury bonds had earlier popped to one-month highs above 3.64% per annum before dropping back 10 basis points after the Department of Labor said initial claims for jobless benefits rose last week back to mid-March's 14-month highs, while continuing claims rose to the highest since November 2021. The yield on 10-year Treasury Inflation Protected Securities, the benchmark for so-called real rates, had also risen earlier back towards four-week highs near 1.30% per annum, the most strongly positive real rate in more than a decade when reached last September. Gold prices then traded below $1,650 per ounce, having traded beneath $1,380 at the previous touch in February 2011. Rising real rates acted as kryptonite to gold prices last fall and again in February, when the negative correlation between 10-year TIPS yields and gold prices reached its most extreme in a decade. The short-term correlation between gold and real 10-year yields remains reasonably strongly negative, says John Reed, strategist at the Mining Industries World Gold Council, and well within the range seen over the past 6 years. Put another way, the relationship between gold and US real yields isn't yet broken. With the US Central Bank currently targeting overnight interest rates around 4.83% per annum, betting that the Fed will raise its target by another 25 basis points at next month's meeting now outweighs bets backing in no change by 6-1, according to data from the CME Derivatives Exchange's Fed Watch tool, up from 2-1 this time last week and below 1-1 at this point in March, when the mini-crisis in US banking saw Swiss giant Credit Suisse forced into a takeover by rivals UBS. Betting on New Year 2024 meantime puts the consensus forecast at 4.66%, sharply above the 4.00% forecast for end December shown by the Fed Watch tool this time last month. With UBS that day taking over Credit Suisse, gold prices popped above $2,000 for the first time since the financial markets shock at Russia invading Ukraine 12 months earlier. Sanctions against Russia over its invasion of Ukraine may now move to a near-total embargo on exports by the US and its economic allies in the G7 group of nations, Bloomberg reports. As gold prices reached $2,010 on Thursday afternoon in London, silver also regained last weekend's closing level, trading back at $25.35 per ounce. Palladium meantime rose back towards Tuesday's sudden 10-week highs at $1,620, and the price of platinum extended its run to fresh 15-month highs, rising within 20 cents of $1,100 per ounce. Mining some 75% of new platinum supply and 40% of palladium each year, South Africa today saw government-owned energy monopoly Eskom confirm that load-shedding power cuts will continue indefinitely ahead of the winter.